gold. I mean, it depends on your situation, but look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. So yeah, I think that if it were me, I would probably sell gold. In fact, I know I would. But to me, silver is something that has been frustrating. The monetary aspect of gold is what has been agreed upon by, you know, by by the central banks. But from a strategic standpoint, you could argue silver is just as valuable. And
Gold continues to trade near record highs, solidifying its reputation as a safe haven asset in the face of persistent inflation, financial instability, and geopolitical uncertainties. This sustained demand underscores a broader shift toward hard assets by institutional and retail investors seeking protection against market volatility. While gold remains at the forefront, silver, though also exhibiting strength, remains significantly undervalued relative to gold. The current gold-to-silver ratio, hovering around 80-1, stands well above its historical average. Andy Schectman, CEO of Miles Franklin Precious Metals, identifies this elevated ratio as a key indicator that silver possesses far greater upside potential. Physical demand for gold and silver continues to rise, with strong premiums over spot prices reflecting an increasing preference for tangible assets over paper derivatives. Andy Schectman consistently highlights the divergence between physical and futures markets, noting that persistent high premiums indicate widespread skepticism regarding traditional pricing mechanisms. A particularly notable aspect of the silver market is the concentration of short positions a few major commercial banks held on the COMEX exchange. These positions are disproportionately large compared to global silver production, creating a potentially unsustainable market structure. If physical delivery demand accelerates, particularly from industrial users or long-term investors, those holding large short positions could face significant pressure. This could disrupt the price discovery process and potentially trigger a major revaluation of silver. Simultaneously, the global accumulation of silver is gaining momentum, driven by nations increasingly recognizing its strategic value. Andy Schectman draws attention to large-scale purchases by countries such as China, Russia, and India, which acquire door bars and concentrates for domestic refining and long-term storage. These actions suggest that silver is no longer viewed solely as a financial hedge, but is increasingly seen as a vital resource for technological and industrial applications. The United States has significantly increased silver imports, likely anticipating supply challenges or rising demand. Andy sees reallocating gold into silver as a short-term trade and a strategic move aligned with global shifts in energy, technology, and industry. Now, we present the clips from Andy's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I mean, it depends on your situation, but look, there aren't very many opportunities where you can get an asset that has this kind of upside potential with such muted downside potential that is being accumulated by, the biggest money in the world. I think that if it were me, I would probably sell gold. In fact, I know I would. But to me, silver is something that has been frustrating, but you can't run away from mathematics. You can't run away from that kind of logic. The old saying, I keep saying, the market can and will stay irrational longer than you can stay solvent. The people that have been playing this game with the futures market are very powerful. You're talking the biggest banks in the world, probably by direction of the federal government or the military industrial complex. And again, that chart, what's his name? That Ed Steer, you saw
Yeah.
that chart that Ed Steer
Yeah.
showed on your site from what's that guy's name that makes the charts? Charts are us. What's his name?
I'm not sure. I can bring up Ed Steer's chart though.
Yeah, that's there's a guy that makes all of those charts. I forgot. I can't believe I can't think of his name. I've talked to him
Here,
about
I'll share Ed Steer's chart just for the heck of it, since you're talking about it anyway. Hold on. Here you go.
the red line would be the four biggest commercial banks, and the green line, the eight largest. So the four is inside of that. Why would you have silver, this tiny little market, having the largest concentrated short position? I mean, and that's concentration. Look at crude oil and you see where oil is right now. I think you have to ask yourself why. Why the hell would they do that? At the same time, China, the second largest producer in the world, is flying all around the world buying doré and concentrate. Russia makes a public announcement that they're adding it to their stockpile. India's bought 900 million ounces in the last 5 years. And of course, this is something that's not stopping. And now the United States is importing it. But why would you have eight banks with that kind of a short position? There's something, that's very strategic about it. But that works when you don't have much of, these much of the world standing for delivery. And you do now. So that's kind of why I think you're seeing the volatility. That's why you're seeing huge deliveries. That's why you're seeing massive imports, because this is getting real. And you don't want to be on the wrong side of a failure to deliver one of these large banks. I guess we'll have to see. But if it were me, I'd sell gold for that reason.
Industrial demand for silver reached a record 680 million ounces in 2024, a 4% increase over the prior year, according to the World Silver Survey 2025 released by the Silver Institute. This marks the fourth consecutive year of record-setting industrial usage, driven by silver's expanding role in solar energy, electric vehicles, electronics, and other high-tech applications. While total silver demand declined 3% due to softer physical investment and marginal drops in silverware and photographic use, industrial consumption remained the market's cornerstone. Global silver demand outpaced supply for the fourth straight year, creating a 2024 deficit of 148.9 million ounces. Cumulatively, the deficits from 2021 to 2024 amount to 678 million ounces, equivalent to nearly 10 months of global mine supply, highlighting an increasingly unsustainable imbalance. This persistent supply deficit highlights the growing concern expressed by industry experts such as Andy Schectman, who has long argued that industrial demand is an underappreciated yet critical factor in the silver market. Unlike gold, which is largely preserved and stored in vaults as a store of value, silver is primarily consumed in industrial applications and often not recovered, particularly in sectors like clean energy and electronics. This dynamic makes silver's supply chain far more vulnerable to disruptions and intensifies concerns about the long-term sustainability of the metal's availability. Silver's essential role in these advancements will only grow as the world continues to prioritize technological innovation and green energy solutions, exacerbating the strain on already limited global supplies. Let's get back to the interview.
Some respects it already is. It just hasn't, the monetary aspect of gold is what has been agreed upon by the central banks. But from a strategic standpoint, you could argue silver is just as valuable. And maybe that's why you see these 8 Western banks that have gone to such great lengths to suppress the paper price. But then again, you're seeing massive deliveries as well on COMEX. And when you see the open interest just fall by 10% yesterday, that signals that typically, to me, that signals that these contracts are getting closed out and are preparing to stand for delivery. So when there is a short, the long on the other side has the ability to stand for delivery. And when you see on the first day like that, it just massive drop in open interest, that to me are contracts that will stand for delivery. And again, we saw, a huge delivery. What did I say on that number? Huge delivery that we just saw. What was the number here? 14,813 contracts. It's the second highest ever. And if we multiply that times 5,000, well, that's 7,400,000 no, is that 74 million? 74 million ounces of silver. 74 million, 65,000 ounces of silver stood for delivery just like that. And I think you're going to start to see silver leave the COMEX exchanges as well. And that's when you'll realize that this is getting really serious. This is a trend that hasn't stopped. We've seen more imports of gold into this country and to a lesser degree silver than at any time since the end of World War II, when everyone sent us their gold because of the Bretton Woods deal. So it's not just gold, it's also silver. And I think the people at the highest levels understand silver. There's a race to secure it. And I think they understand that it is strategic. It's not tier one, so it doesn't have the same implications that gold does for the Basel III regulations. But when you see Russia and India and China and all of these countries on a mad dash for it, I think that people in the United States who are making the policy understand that as well. And that's why you're seeing so much brought into the country from London and from Switzerland.
We've got a question here from Fazdal again. What does Andy think of Mike Maloney's theory that Scott Bessent will revalue gold to $10,000 by the end of summer?
Well, I liked his. I gave him credit for it. I talked about it. His video was very cool. I think it's a little aggressive to say that by the end of summer, but he talked about backing M1 with gold, and the numbers he used was 2,365,000,000,000 divided by 261 million ounces. You get $9,044. That is what gold would be today if we backed M1, which is the Federal Reserve notes in circulation. That's the way it was prior to 33. The dollar was backed by gold. It was M1 notes in circulation. And M2 is credit. It's 92% credit, according to Mike. And it's all the numbers that you see in your bank account. That's just credit. They don't have it at the bank. If you had $5 million in your bank account and went there and demanded it, well, you'd be lucky to get 2% of that, which is interesting. By the way, just noticed a story today. Spain has introduced strict new rules on cash withdrawals. Withdrawals over 3,000 euro require advance notification to the tax agency. Over 100,000, you need 72 hours notice. So, but getting cash is harder and harder. But anyways, that was a little side digression. But when you talk about Mike's point, he would be talking about fully backing the currency in circulation with gold and making it redeemable. It's aggressive. He said, well, 9,044, they would want some wiggle room, so they'll put it at 10. It's a take that is well thought out and articulate, and I think it's aggressive. I don't think it will happen.
The future of silver appears increasingly bullish, driven by a combination of industrial demand and supply constraints. With global trends shifting towards clean energy and high-tech innovations, silver's role in solar energy, electric vehicles, and electronics is expected to grow even more critical. This demand, coupled with the fact that silver is often consumed and not easily recycled, places significant pressure on the supply chain. As silver production struggles to meet this increasing demand, a persistent supply deficit is anticipated, which could further elevate prices in the coming years. Additionally, with investors looking for alternatives to traditional assets as a hedge against inflation and economic instability, silver's dual nature, both an industrial metal and a store of value, positions it as a potentially lucrative investment. As a result, silver could continue to see strong price growth, particularly if industrial demand remains robust while supply remains constrained. That's it for today. Share your thoughts on Andy's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.